Welcome back. Time now for the Word on Wall Street. Top investors watching your money. Joining me now is Payne Capital Management President Ryan Payne. Also with us is Adam Johnson this morning. Ryan, great to see you.
Great to be here, Maria.
Thanks so much for joining the conversation. Markets this morning are searching for direction, I guess I would say. Geopolitical tensions taking center stage, including President Trump now weighing his options to acquire Greenland. The S&P 500 and the Dow hit fresh record highs yesterday. The Dow above 49,000 for the first time. And chip makers are certainly rallying, leading this melt up. AI-driven demand, tightening supply chains, fueling expectations of higher prices here as well. Check out Micron, up 10% after it rallied 240% in 2025. SanDisk soaring nearly 28%. Chip makers seeing the benefits from this booming data center and AI storage demand story. Ryan, you think this continues throughout the year?
I do. I think right now, I mean, literally, you have everything working in the right direction, right? We see GDP growth has been relatively strong. If we look at the earnings outlook, it looks very good. We're looking at double-digit earnings growth again this year. I think you have a solid bid under that AI trade, especially, I've said this before, just blindly buying the S&P 500, it's disproportionately going to your Magnificent Seven trade and Broadcom. But I would say what's interesting about this year so far is all the other asset classes and investments that are working, right? International is going through the roof. Emerging markets are really skyrocketing already this year. Energy stocks, we had a big surprise there. They're already up like 2% for the year. And I talked about this on your show Monday, but anything that's like a dividend payer right now looks very, very attractive. So there's just so many good places to put great places to put your money. I'm like a kid in a candy store.
I like that. And I mentioned to Adam earlier, when you look at energy, you're getting the benefit of perhaps a boom in energy. And I recognize some of these oil companies will pull back as prices go lower.
Yes.
But you also have, as you just said, the dividend play, which is a good one because the oil companies are big dividend payers. Hey, guys, I think the Supreme Court is going to rule on this IEEPA case by Friday. The Supreme Court has declared Friday, January 9th, an opinion day. As their first day back from their 4-week break. The Supreme Court will return on Friday. Opinions will be unsealed shortly after 10 a.m. Eastern. Is it going to be the opinion on the tariffs? I don't know. But the opinions will be released and unsealed shortly after 10 a.m. It could be. So we could actually get that IEEPA decision and the Supreme Court's decision on the president's use of tariffs in an emergency this Friday. If markets sell off, if it's the wrong decision, what do you want to do?
I don't know if it's going to matter that much because I do think the Trump administration has other levers they can pull. They can use other rulings to keep them in place.
Yeah.
Yes.
And I said this before, like, you know how hard it is to get money back from the government when you want your refund. So I think to get these companies to be refunded, I'm hard-pressed to see that happen. And I think we're talking about something getting closer to like $200 billion.
Yeah.
Now, let's just say worst-case scenario, that money does have to go back. Then the questions about the deficit come in, and could the bond vigilantes start to like really protest, and you see longer-term rates go up. This is another reason why you want to have some international exposure, because that could also mean a weaker dollar. So I'm a big proponent this year of go global, don't just stay home.
Yeah, I mean, there's no doubt the president has replacements. There are statutes
for tariffs
in the Constitution.
Absolutely.
122 and 338 are statutes where he could raise revenue, and he'll get that tariff revenue, even if they turn it down. But I think that what you just said is likely, if it happens, if it goes against the president's way, and we'll have a bond market tantrum.
Yes.
And if we have a tantrum in the bond market, a taper tantrum there, then that would follow up with the stock market sell-off as well. We'll see. We'll see if we get the decision on Friday. What about oil, Adam? Brent and crude lower this morning. You made the point earlier that when oil prices go lower, the oil companies pull back, and I agree with that.
Yeah, because by definition, they're making less.
Right, they're making less money. But the sweet spot is 65 to 85. I don't see oil going back to 65 or 85 anytime soon with the president's efforts to rein in inflation.
No, definitely not. The good news is that this is good news for all of us, right? Lower oil prices, that touches everyone. As far as the oil equities, you know, I remember when I was an oil trader and I went down to kiss the hand of the head trader at Exxon, and he said, Adam, let me explain how it works here at Exxon. We sit down in November and we put our CapEx budget together for next year, and then January starts and we go out and we drill. And we bring oil to the ground, we refine it, and we sell it, and we all make a lot of money, and everybody's very happy, right? So these things are like aircraft carriers, these oil companies. And so oil prices move every day, but the budgets have already been set, where they're drilling, what they're doing. They're going to keep making money. But if you ask me, would I necessarily buy Chevron here with oil prices going down? No. Might I, however, buy a Schlumberger or a Halliburton? Yes, because oil services companies make more money the more drilling that happens, and we are drilling a lot of oil.
Well, the news today is President Trump says that Venezuela is going to redirect 30 to 50 million barrels of sanctioned oil, worth up to $2 billion, back to the United States under this new deal with Washington. This would divert shipments away from China, as supplies are expected to move through the U.S. Gulf Coast refiners. Chevron, of course, the only U.S. firm authorized to export Venezuelan oil, and that stock has been on fire as a result of all of this.
Yeah, and the refiners, because now the refiners get the benefit of that oil that they weren't refining before that was going to China. So if you think of like Valero, you think of Marathon, they're already up like,
take that off the screen. It's
5
not
to 10%
billion, it's
this
million.
year.
Sorry.
So yeah, no problem. Numbers have to be right.
Yeah.
So the refiners have actually done really well this year because they're going to benefit from that. But at the end of the day, that's just oil supply that's already out there. And I've been reading Bullseye Brief now religiously every day. And you've been talking about that glut in oil supply for a long time. That's not going away. That's very disinflationary. And another reason why we're seeing long-term rates stay pretty much in the same range that they've been for like 2 years. So I think bottom line is inflation's pretty much moderate this year. We've got GDP growth that's strong. And at this point, we've got earnings growth that looks phenomenal. So it's just so hard not to be a bull
and
right
profitability is at a record. 13.2% margins in the S&P 500, the highest ever, in spite of tariffs, in spite of inflation, in spite of uncertainty, in spite of everything. It's a very, very strong backdrop.
So we're on the doorstep of earnings again.
Yes.
Are there areas that you're expecting good earnings performances for the quarter?
Yes, and the areas, quote unquote, would be across the board. I think we're going to see that the fourth quarter was a fifth consecutive quarter of double-digit gains with, again, record profitability. And as I look forward, which is the most important, I see more of the same. GDP growth is above 4%. Inflation now is in the mid-2s. That's very strong. We have a business-friendly Washington. We're about to get the largest refunds in history. People are going to be making more money, which means they'll be spending more money, which means companies will profit. It's a very strong picture right now.
Meanwhile, interest rates this morning, I want to show you the 10-year because the 10-year has been spiking the last couple of days. The December ADP report is out this morning at 8:15, about an hour away. 47,000 private sector jobs added to the economy is what we're expecting. Look at the yield now, pulling back, down 2 basis points on the 10-year. The November JOLTS report is also out this morning at 10 a.m., and we've got the December jobs report out on Friday, where the expectations call for 60,000 jobs created. The unemployment rate ticking lower to 4.5%. Do you worry about the jobs picture here?
No, I think the biggest surprise this year is we're going to see a strong job market. I think a lot of what happened this past year was tariff turmoil. A lot of companies didn't know what to do because they didn't know what the rules were going to be, but now we're starting to see basically workarounds. Obviously, a lot of tariffs have actually gone away. There's exemptions. So you have clarity around tariffs. Companies' earnings are going up. We know the economy is growing, as Adam was just talking about. So I think that companies will absolutely start hiring again this year. Maybe 100,000 jobs per month is my prediction there.
What do you think?
Yeah, I'm with them. There's no reason to think that companies would pull back. So I'm very positive. You say, gosh, Adam, you're like a Pollyanna. What could go wrong? Well, inflation could go back up, or we could get a blue wave, and that would unsettle markets. But I don't think either of those will materialize.
Well, you both have been spot on in terms of your expectations for this melt-up in markets. You were saying this a long time ago in the middle of really lots of questions about these valuations. So thanks for that, guys.
And the best dressed on your show. But thank you.
Great to see you. Ryan, Payne, thank you. Adam,
Thanks,
you were with
Maria.
us all morning, and we appreciate that.